All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at SLG. All right, this is SL Green Realty Corp. This is a commercial real estate stock, and the commercial real estate sector has been rightfully so battered and beaten to oblivion, right? Now, what's really interesting is we came down, and I highlighted this in my last video that we were going to get this 1, 2, 3, 4, 5 bearish structure targeting the great financial crisis demand zone that we established when there was an initially a 94.86% drop from, the peak to the trough. So now that we've come down and tested that zone, we are bouncing, right? We also had bullish divergence here on the RSI. I'll break all of this down for you guys. We're going to zoom in and go over the daily chart levels as well and see where potentially SLG could continue going if we want to keep up this bullish momentum. You do need to be cautious that a bear flag might be forming here. All right, well, so we'll break down the charts and the technical analysis. We're also going to use today's sponsor, Simply Wall Street, to dive into the fundamentals. It's a really great platform if you don't know how to do fundamental analysis or you're not an expert or professional. They're going to help you guys out and make it very simple. You guys can get a 14-day free trial using the link in the description or pinned comment down below, as well as up to 40% off for the first 100 people to join. All right, and we're going to use it to dive into the fundamentals. It also gives you guys some really great graphs and visuals and charts to help, make things easier for you to understand and see. So we're going to dive into all of that on SLG today. Make sure to smash that like button and subscribe to the channel if you guys are new. All right. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. Now, we'll go ahead and start off here with some of the fundamentals, and we can see that currently it's trading at 46.9% below the estimates of its fair value. It pays a high and reliable dividend of 13.14%, which is why a lot of people like this stock in the first place, is because it is a dividend stock. Now, to know a little bit about the company, all right, it's focused primarily on acquiring, managing, and maximizing value of Manhattan commercial properties. And it has some of the top and most prime commercial properties and commercial real estate in Manhattan. Now, there's a lot of rightful fear and FUD surrounding commercial real estate right now, is particularly due to, the loans, and then they're going to have to, redo those loans here shortly. Okay, but as you can see from the chart that we showed earlier, the stock already dropped about 86%. So a lot of that has been rightfully priced in. Now, can it go lower and could the news get worse? That's definitely a potential. But when you take a look here, all right, at the price to sales ratio versus its peers, it is a good value based on its price to sales ratio compared to the peer average of 11.7x at 2.1x is where currently SLG is. Now, the shareholder returns over the past year are down 53%, but over the past 7 days, it's up nearly 15%. It has underperformed the U.S. office REITs industry, which returned negative 43%. So even though that, the industry is taking a beating, SLG as an individual stock has taken even more of a beating. And when you look, it also underperformed the US market, which returned 1.3% over the past year. Meanwhile, SLG is down massively. Now, from a volatility standpoint, it is higher in volatility than the industry as well as the average market volatility, but it's not significantly more volatile than the rest of U.S. stocks over the past 3 months. So, there is some volatility around there, but it's not extremely volatile, but it is higher than the average market and industry average volatility. When you take a look at the price to sales ratio versus the industry, it's right at there, okay? It's at 2.1x and the industry average is at 2.2x. So, you could say it's a good value based on that. But it's really not trading far off from there at the moment. Now, when you look at the share price versus the fair value using a discounted cash flow model, it's about 46.9% undervalued, potentially putting the fair value of the stock here right under $50 at $49.98. So, it is trading significantly below its fair value. We'll see if that fair value is going to be correct later in the future. That's definitely something to pay attention to. Now, the price to sales ratio versus its fair ratio, it is expensive based on its price to sales ratio at 2.1x compared to the estimated fair price to sales ratio of 1.6x. Now, some of the key information is a 29.6% earnings growth rate, 15.9% EPS growth rate, We'll dive into some more. All right. The debt to equity ratio is at 112.3%. That's really high right there. It's got a 13.1% dividend yield with a 15% payout ratio. The financial health is where it's really taking a beating at, guys. It gets a 1 out of 6 there. And a lot of it is due to its debt and its liabilities. And again, the really high interest rates coming around the corner that they're going to essentially have to face eventually, right? Now, again, that was all done using Simply Wall Street, today's sponsor. Use that link in the pinned comment down below or in the description to get you guys a 14-day free trial. What I want you to do is actually not to look up SLG, but look up one of your favorite stocks or maybe a stock that you're looking at investing in and use Simply Wall Street's platform to dive into the fundamentals and see, is it potentially a good value or is it overvalued at the moment? And maybe you should wait potentially for a pullback. Okay, remember the first 100 people to join get up to 40% off. This is our weekly chart right here. I kind of broke it down for you guys in the beginning earlier, but you can see, we had this 1, 2, 3, 4, 5 bearish structure. Typically, after you complete a 5-wave structure, you look for some type of a correction, right? In this case, it would be a bounce to the upside. Now, we've already started that bounce. We did have the bullish divergence. If you're not familiar with that, I'll break it down for you guys really simply. Take a look how we're making a low, a higher low, and a higher low here on the relative strength index. That is your RSI. So it's going to measure the relative strength of a stock at its given prices. And we can see here, right, we have a low, okay? And then we come down here and make a lower low, and then we make a lower low here. So now, the stock has clearly been in this downtrend, okay? But meanwhile, while it's been in the downtrend, it's been increasing in relative strength. Okay, so it's been building relative strength as the price of the stock has been going lower. It's a simple term known as bullish divergence, and sure enough, we have seen a nice little bounce here. We'll zoom in on the daily time frame to see if there's potentially more room to run. All right. Again, I want to highlight where we came down and tested the great financial crisis price levels on this stock. So, it basically wiped out, over a decade worth of gains in a very short period of time. All right. And, we're seeing it back down at those historic levels. If we zoom in here on the daily time frame, we have our fans on here. We have our fan trend lines. You can see we recently just broke that trend line and we're getting a strong push to the upside. We're going to see if we can continue trading in this bullish structure that we have right here. But you do need to be cautious that this is a bull flag or a bear flag, right? Where we have the flagpole and then here's the actual flag itself. If we break the bottom of this channel right here, there's a very strong chance we could come down, retest that 16, 18, if not potentially even lower level. That's a pretty significant drop from where we're at right now. Now, we do have some resistance coming up in the form of trend lines, right? We have our trend line here, all right, the bottom or the top of our bullish structure, as well as our Fibonacci fan over here approaching. So it'll be really interesting to see what we do around this level. If we can break out above this trend line fan here, we can just continue trading sideways and upwards in this bullish structure. 28.96, 31.97. Those are really going to be some of the major resistance levels that you guys need to pay attention to. These are the major Fibonacci retracement levels, okay? The 61.8, 50%, and 38.2. These are the three most common and well-respected. There are other retracement levels, but I use these because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation lower, or move up, retracement, continuation higher. So, we're going to see this massive move down that we had. Are we going to retrace up to the 38.2 at 28.96, or the 50% at 31.97, or the 61.8 level at 34.99? A move up to these levels is all considered healthy retracement territory to potentially continue the downtrend. Now, that doesn't mean that we have to, do a downtrend. You can also use the fibs to spot reversals, right? If we break through these levels, that's how we can potentially spot a larger reversal, okay? And so to explain that, you have the move up, retracement. If you start to consolidate and break through those Fibonacci retracement levels, you can spot a potential downside reversal. And if you move down, retrace up, and consolidate and break through there, you can spot a potential upside reversal. So if you're bullish on this, you'd look for a potential upside reversal, and essentially you would want to flip $35 to support from resistance. And if you can do that, then that's when you can potentially get the larger move to the upside and a much larger scale reversal, right? You can see over here, we just got through a key level of resistance. All right, and we flipped that to support, and now we're going to see if we can continue heading upwards up to that 29.32 area are going to be some of the first price targets to pay attention to. Hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel for more. I recently just put out a top trade ideas video going over about, roughly 10 stocks that have some different setups and some of the different setups that I look for. If you guys enjoyed this video, you may enjoy that video as well. So you can go ahead and click on it here.